Well, welcome back to your Financial Corner with UHS Employee Federal Credit Union. I'm your host, Steve Campbell, Director of Community Engagement down at Seed Planning Group. We are an extension of the credit union and a partner offering fee-only financial planning and investment fiduciary services. Today's topic, we want to talk about money can be very, very stressful. We want to look at three big questions and break them down for you. So let's check it out. Well, if you're like many Americans, you're probably wondering, do I have enough money to retire? Maybe you're heading towards retirement and you're concerned that maybe COVID has impacted you more than you even realized. Maybe 2020 has been a wake up call that it's time to get your finances in order. If there's been a world pandemic that has scared all of us from a physical health standpoint, but maybe you've also realized that you're not also as financially healthy as you thought you were. So you may be wondering, do I have enough money to retire? Or maybe you're starting off your career and you're wondering, am I saving enough money for retirement? I want you to know that you are not alone. This is typically one of the main reasons that somebody comes to work with our financial planners to really understand, am I on track? There's so many moving parts and money is so stressful because it's not something that we openly talk about with family and friends. We typically take our cues from social media or maybe the questions that we put into Google. And if you're in the healthcare field, you know that one of the worst things you can do if you are a patient is to go on WebMD and try to look up your symptoms. Well, it's no different when it comes to money and finances. Many times because it's outside of people's wheelhouse or area of expertise, they will go to Google and say, how much money should I have to retire? And there is a litany of articles out there, some validated, some not. We don't know who wrote all of these, but you can find that you need to have 12 times your earnings potential in order to retire. You need to have $1 million. You need to have 7 times your last 3 years of employment in order to retire. There's all these different categories letting you know how much money do you have to retire. But then you also have through your maybe your workplace employer retirement readiness tools that tell you, are you on track to retire? They may be simply only looking at just your 403B and trying to tell you whether you're on track or not. But there's so many other moving parts that go into retirement. Maybe you're fortunate enough at UHS to have a pension. Have you begun to look at your Social Security? Are you married? Do you have a significant other? Are they working? Do they have retirement assets that you can rely on? All of these pieces have to be put together and also have an understanding of what kind of money do you need in retirement? Not just from an investment standpoint, but in your day-to-day spending. Do you have a handle on your expenses? Has this year shown you that maybe you weren't as ready or prepared financially as you thought you were? Are you still living paycheck to paycheck? Well, when you get into retirement, you have to have an understanding of, are there certain debts or liabilities that maybe we're going to pay off once we get into retirement? Or what is our standard of living that we need to expect or be prepared for? Because again, it's hard to come to a financial planner and say, can I retire? If we don't know what kind of money do you have to spend every kind of year, or what kind of income do we need to come up with? So that's one of the best indicators to know if you're on track to retire, is to really schedule a meeting with a planner at no cost to share what your dreams and goals are. What does retirement look like? And then start to look at some of the pieces that you already have from your 403B, your pension, Social Security, maybe your spouses or significant others pieces that they're bringing into the table, and then put that income in to look at. Retirement is about 30 years now. You know, years and years ago, retirement was maybe a 10 or 15 year window, but now it's 20 to 30 years, God willing, that we all stay in good health. So you have to be prepared to know that your money's not going to run out, that you can retire when you want to. And that's what financial planning can help you do. If you're thinking about retirement, it can help you know if you're on track. And if you're younger, you're probably thinking about what's that balance between maybe paying down my student debt, saving in just a regular savings account, or putting money into my 403B. Financial planning is the process that helps you understand how to allocate money into these different buckets so that you're not, yes, you have to make sacrifices, but that you're not killing yourself in the process. There also has to be fun in all of this. You don't just work to work, you're working towards something, right? And so our planners can help you understand, are you on track? And then what are the pieces that you can put into place now to be better ready for retirement when it comes down the road? One of the common concerns you may have is, what happens if something happens to me or my spouse? You know, this is a part of what we would call survivorship planning. That's a key component of financial planning, where we need to look at, especially if both spouses are working, What happens if you ever lost one of your incomes or both of your incomes, either due to circumstances beyond your control, job loss, something happens? Survivorship planning is important because if you're also the main breadwinner for your family and your family relies on your income to pay your bills and to continue your quality of life, you need to understand what happens if you ever become incapacitated or don't have the ability to go back to work, whether it's short or long term. And right now, maybe open enrollment for you. There may be a window where you can go in and check your benefits. Maybe you have things like disability insurance available to you through UHS, and you're not sure whether this is appropriate or not. You know, the great thing about our planners is all of them are salaried, so nobody is incentivized to sell products. We don't work on commissions. So if you're trying to consider, is disability right for me, whether it's short or long term, our planners can help you understand how that would actually factor into your overall goals and the different financial pieces that you have if you ever hurt yourself or broke your leg and you couldn't go back to work for a couple of weeks, or maybe it's something longer term, you became sick or couldn't go back to work. Is there some kind of income still coming in? So if you're ever concerned about, what if something happens to me? A lot of times people will ask, is life insurance appropriate? You have to understand that the financial services industry is incentivized for selling products. So if you ever go to a life insurance specialist, if the only thing that they sell is life insurance, that's how they're paid. So they'll talk to you about things of what if something happens to you? What if you pass away early? Those are tough conversations to have with somebody. But if the only suggestion is just to buy life insurance, you may be wondering, is this really in my best interest? Our planners can help you assess whether life insurance would be appropriate or not, but we do not have the ability to turn around and sell it to you. So if you're concerned on what if something happens to me, could we still afford our mortgage, our rent, pay our bills? What does retirement look like? How would we ever provide childcare if something happened to one or to both of us? Then it may be a good conversation to understand, is life insurance appropriate? But again, we need to look at the overall picture and understand, would there be a gap or drop off if something happened to you? And then could then and only then life insurance be a supplement? And what type of life insurance? Because there's a series of life insurance products out there, from term to whole life to universal. What does it all mean? Our planners can help you understand that. So if you're concerned and wondering, what if something happens to my spouse, my significant other, or even myself? What if I can't go back to work? What does that mean for myself, my children, mom and dad? Then this is a great time to have a conversation with one of our planners. So the last big question that I wanted to bring up that we hear quite a bit is when people ask us, am I actually invested properly, or am I taking too much risk? Investments can be extremely overwhelming. If you're at UHS, you may have a 403B and you don't even know what that means. You just see a statement, money comes in, money goes out. Every quarter you get a statement, and either the value has gone up, the value has gone down, especially in 2020. Back in March and April, we had a pretty significant market drop. And if you had received your investment statement during that time, you may think, why do I even invest? I have no control over the stock market. This thing must have a mind of its own. Why am I putting my hard-earned money into something that has the potential for losing money? I should just take it all out. If that was you and you had that concern, that's normal. A lot of people have those concerns. Because again, when the market's going up, everybody's euphoric, everybody's feeling good. You tend to purchase more things because you think you're making more money. When you open that envelope, you look at your balance, and if it's gone up, you feel great. But it also feels extremely painful when you've ever lost money or money's gone down. Now, how is the only way that you can actually lose money in investment? If you sell at the wrong time. If you never sell your investments and you hold whatever is the underlying investments in your 403B through market cycles, you're going to make money. Your account's going to go up and down in value. But the only time that you can actually really lose money is if you sell your investments and you miss any opportunity on the upside to put that money back to work. Let's say you sold your mutual funds and you're just sitting in cash. So you may be wondering, not only has COVID happened, it's been an election year if you didn't know. We're still trying to figure out what in the world is going on with this thing. So you've been wondering, how could the election affect my investments? Am I taking too much risk? I want to be able to share maybe a couple of tools with you that may be helpful. So I will make sure that in this next segment, we take a look at a tool that may help you understand how much risk are you taking. So let's take a look at a portal that's available to you that you can use for free at any time. A big part of what we do is we provide guidance to 401k participants as a part of our Suite K division. A portal that we created for 401k participants to come to get financial resources, education, understand financial planning can help them is also available to you. You can see up here at the top of our screen that if you put in seedsweetk.com, that's seedsweetk.com, you can go to this online portal, find out things about financial planning and education and resources. But what I wanted to primarily point out to you is that you have a tool right up here at the top where you can understand, am I taking too much risk? You know, in the last segment, we talked about that this is a big question that people ask us all the time. We have created what's called a risk tolerance questionnaire that's only a simple few questions that you can actually fill out, that you can actually understand potentially how your money could and should be invested. But again, you want to seek financial professional advice before you make any changes. So what you would do is take this questionnaire. When you click the find out here, it's going to run you through. I plan to begin withdrawing money from my investments in. Answer this question, what would be appropriate for you? Maybe you're younger and you're going to retire in 8 years or more, so you'd answer the question appropriately that way. Once you begin withdrawing funds from my investments, you plan to spend all the funds in. So again, we just talked about that retirement is probably going to be 25 to 30 years. For many people, that's going to be 8 years or more, but answer this question depending on how you would see fit. When making financial decisions, I consider myself conservative. We're not talking about your political party. This is how you actually look at investments. Would you find yourself to be conservative as an investor, kind of middle of the road, or aggressive? You like to go for it all, make money. Doesn't matter if money goes down, you want to make as much money as possible. Let's say that you are middle of the road. Number 4, when I invest my money, I'm investing primarily for protecting principal, generating income, or mostly growth. Well, I'd like to grow my money as much as possible. And then this 5th question, this is not an old school SAT question. We are not here to screw you up, trip you up, whatever. This is really just to give us a gauge of how you look at risk versus reward. So you have A, B, C, D, and E here on the left side. You have the middle column that says worst, and the right column says average. So the question is, if you have $10,000 to invest in the following or 5 different investments with their possible worst year, an average 1-year return ending values, which investment would you choose? So you can see that in, let's say C, you have $77.50 left over when you invested $10,000. You can see that there was a little bit of a market drop, but you can also see that the upside was maybe the $830 additionally that you made. So you can see how that average changes. We want to try to just get a gauge. And again, this doesn't throw off the whole questionnaire depending on how you answer it. But let's say again that you answer this question kind of middle of the pack, you're not really sure. When you submit this, this will actually understand what your risk tolerance could and should be. So what does that mean? If you take a look at your 403b account, this is saying that if you answered those questions just the way that I did, an appropriate allocation would be about 65% in stocks, 35% in bonds. You can go into your 403b portal, pull up how your 403b is invested based on how you answer these questions and look at, is there a difference? Now, that doesn't necessarily mean that you have to make changes to your account, but it will at least give you a gauge of how your money could be invested based on how you answer these questions. We then provide some kind of guidance into how this money could be invested. So many of you may have a target date retirement fund, which may be appropriate. So if you're going to retire in the next 10 years, maybe you're looking at a 2030 fund. Maybe if you're younger, you're looking at a 2040 fund. But this can be a pie chart used for an individual who says, you know, I like to kind of manage my own money and pick my own types of mutual funds in my 403b. You can go into your 403 portal, look at how this pie chart is broken up. These numbers correspond. You can see here that 29% of this account could be invested in a large cap fund, 20% in some kind of high yield bond fund. And when you go into your investment choices, these will all be available to you potentially. And you can just match this up as close as you want. But again, we would suggest that you work with an investment professional before making any changes. But this is a great tool that's available to you. Now, if you're not sure and you want to take maybe a next step to talk with one of our planners, here's where you can hit contact us, and one of our planners will get in touch with you to offer your first no cost, no obligation meeting as a credit union member, where again, we're just going to understand what is it that you're trying to do with your money. And if we believe that some kind of investment overview, a retirement analysis, or full-on financial planning would be appropriate, the great thing is that because you are a credit union member, there is actually the ability to receive a discount on our financial planning. So I thought for this video number 2, looking at money can be stressful, these would be 3 big questions that we should try to discuss to let you know that you're not alone. So if you thought about these questions, you're perfectly normal. These are things that a lot of people come to us with. We hope that this video resonated with you. If you have any questions, you can reach out to the credit union or to us through our website, which is seedpg.com. That's seedpg.com. And on behalf of our team at Seed Planning Group, we want to wish all of you a happy and healthy start to December, and let's make it a great end of the month.